there's not enough infrastructure set up to make like non-crypto native companies comfortable yet. Like whether it's like good MPC support or like good tooling, like we just don't have all the things to really enable a business to run on just stablecoins, right?
Welcome to High Stakes, the podcast committed to demystifying the institutional adoption of blockchain technology. I'm your host, Alex Nwaka, and today we're elevating the Web3 discourse in a series of conversations with industry iconoclasts that are shaping the future of Web3. Now let's get started. Welcome back to another episode of High Stakes. I'm your host, Alex Nwaka, and today I'm joined by Nick van Eck of Agora Finance. How you doing, Nick?
Good. How are you doing? Thanks for having me.
Oh, thrilled to have you on. So, Nick, you obviously spent, most recently 4 years at General Catalyst, very, very well-known, I would say, venture platform, multi-stage and so forth. Maybe just give the audience a sense of what you invested in while you were there and sort of your experience as sort of a venture investor before becoming an operator.
Yeah. Maybe I'll even take like a step back before getting to GC, because that's actually what brought me there. But I got exposed to markets and investing at a very early age. So I knew early on in my life that I wanted to get in the investing world. So I actually started right out of college at a firm called JMI Equity, which is one of the oldest enterprise SaaS investment firms in the world. The founders of the firm worked at Alex Brown, which was one of the OG software investment banks. And JMI was actually the original investors in ServiceNow, which is one of the largest enterprise software companies in the world. And so I started out my career there primarily focused on growth stage investing. The last thing I worked on before going to General Catalyst was actually the ultimate software take private that we did with Hellman & Friedman, Blackstone, a number of other firms, which was the largest software take private at the time at $11 billion in enterprise value. And so I was brought to General Catalyst to do much of the same, which was enterprise software investing at the growth stage, but ended up doing a little bit more than that. Dabbled a bit in healthcare investing because that was a very big priority of the firm while I was there. And then also helped spearhead some of the initial crypto initiatives. So a lot of my last investments prior to leaving and becoming an operator were directly in seed stage crypto startups.
As you know, I spent a lot of time as a sort of venture investor before becoming a crypto operator. And I always ask folks that have been venture investors, what did you learn or maybe even more importantly, unlearn while you were an investor, a VC investor?
Yeah. So really, because I was almost in VC from the beginning of my career, like everything I've really learned in my career was in that seat. But you get like a PhD in sort of starting a company and all of like the mistakes that can happen. And many mistakes do happen. I think there were some like very basic lessons that like I learned. But I would say one of the things that really influenced like how I started the business is having like that 10-year vision. Right, is you find that like the best founders, like and there's a lot of pivoting, of course, that happens, and we've pivoted like a little bit ourselves. But like having a view of the world that is contrarian in some way, or different in some way to the status quo, and building a product and a company that is going to fit where the world is going to end up or what it should be in its ideal state, right? And so before starting Agora, I had a very defined, 1 year, 5 year, and 10-year plan of like what I thought the world would look like based on a bunch of different variables with regards to stables and cross-border payments and blockchain eating traditional financial services. And we've been building towards that longer term vision from day one. So I'd say that's like one of the things that played very heavily into me starting in the company and making sure that, okay, like this is like a very large market opportunity, which we believe it is and will continue to grow very rapidly over time, but also like building the right teams. Teams are extremely important. And so, a lot of my career has been very much like, I would say front office facing, right? Or like in many ways, like BD and sales, right? Like as like a venture investor, not only are you thinking critically about industries and, developing a domain expertise, but you're also selling money, right? And like that's actually kind of like what we're doing in Agora today. And so, what I needed to find is, technical co-founder and operational co-founder that I thought filled a lot of gaps, right? And specifically for this business as well. And so one of my co-founders, Drake Evans, was the lead dev at Frax. So the second largest decentralized stablecoin. at the time of us starting the business. Before that, he had spent his career in payments as well, so working in very secure financial service environment. And then my other co-founder is Joe McGrady, who is head of global ops at Galaxy the last 6 years. And so stood up trading desk, asset management arm, lending arm. He was actually the design customer for Fireblocks, and so is in charge of doing a lot of the heavy lifting on the back end and on the finance side, which is stablecoin and financial company requires. And so it's took me a few months to find like the perfect co-founders to sort of fit this vision. Those were like two of the things or frameworks that I had in mind before starting the company.
Yeah, it's really interesting that you mentioned team. I was taught very early in my venture career that most of the reasons why companies fail, it's usually related in some way to founding team, either internal issues or other issues in terms of gaps on that founding team. And so really interesting to hear you talk about how much that influenced, right, how you picked the cast of characters that have really joined you on the Agora journey.
Yeah, because at the end of the day, like that's like the backstop, right? Is like you need to have hungry people that can execute, that have like very strong domain expertise. Because, I have, talking about this 10-year vision that I have, well, what if it's totally wrong, right? Then you need to pivot, right? And you need to have a team that is extremely capable. And so, yeah, I think that's right. And also something we've been chatting about, over the last couple of weeks is so much about like success in life is just like continuing to like beat on, right? No matter like how many times like you get like, punched in the face and like crypto, like that's like very, it's obviously a highly cyclical industry, but like if you just continue to push when others don't, like that is also like a really good necessary characteristic to have for a successful team.
And, maybe talk a little bit about the decision to start Agora and leave sort of the venture seat and move into an operating role. Sort of what factors sort of led you down that path and led to the decision. And I actually am really curious because I have a lot of mentors in my life that, I think have added a lot of value at critical decision points in my life. And so just also curious, like who you sought advice from in sort of making that decision and what tidbits that came out of that advice that you think is generalizable or helpful for the audience as well.
I mentioned earlier, I got into markets and investing very early on. And so throughout college, my summer jobs, I tried to figure out like what in the investing world I liked to do. So I, worked at a hedge fund. Then I was also fortunate to work at Cambridge Associates, where I got to see like all the best managers across different like strategies and asset classes, whether it's like a long short, long only, buyout, like early stage VC. And I think what initially attracted me to like growth stage software and like some of the early stage stuff is, I grew up in a very entrepreneurial family. My dad runs a business. And so I liked the idea of building companies and like building teams versus like financial engineering, like teams, which is like what a lot of like the late stage buyout type firms do. And also being close to a team over a longer period of time. Like one of the things I didn't like about a hedge fund is like very short-term oriented or relatively short-term oriented. Like it could be like a day to a month to 6 months to like a year in terms of like how long you were holding a position. Obviously, there's some funds that hold positions for several years. So that's like what attracted me to like, I would say venture or like growth stage capital of like tech in the first place. And I think in hindsight, it's just because like I grew up with an operator like as in my family, and like that's probably why I was drawn to it. And so for me, and I always joked even when I was at JMI with some of my colleagues is like, find the right software idea, we'll Lee start this company, right? Because I think you want to build in a market that is going to be around for a long time. Is very large and is a market that you're really passionate about. And I hadn't found that until, really getting into crypto. And so it was a combination of those things where it's like, okay, I want to, I felt like this was inning also number 1, 2 of what is going to be like a multi-decade story of blockchain eating financial services. Whereas I had gotten to cloud software and enterprise software when I thought it was like inning 6 or 7. And it was kind of like at the tail end of that heyday. And I was like, well, it'd be really interesting to like go build a company in like a game-changing industry from day one. And looking at the market, I still felt like we were early days. I felt Like I wanted to go create value versus just sort of sit on the sidelines. Like an inventor, I kind of felt like I was in many ways sitting on the sidelines in an industry that I was like passionate about. And like, the stablecoin space was like ripe for adoption. So you had this duopoly cartel with Tether and Circle. And I was like, and everyone is making a lot of like hoopla about like how much money Tether and Circle were printing. And I was like, okay, well, like there's like a better solution for crypto, one where like all of the participants and businesses that are part of like this value chain actually get value that accrues to them versus just, Coinbase and Circle's case and Tether and Bitfinex and Tether's case. Right. And so there was an impact that like I felt like we could make as well. And so, yeah, that's like all the things that were stirring around in my head. And so, timing just felt right. And then in terms of mentors, it was just like years of chatting with people. Right. And like sort of, not that I'm like that old, but getting like a little bit older. And it's like, if there was ever a time to start a company, I actually felt like now was the time to do it. So, for people that don't know me, I'm like in my late 20s, right? So I've had almost like a decade of like professional experience, but I'm not, I don't have kids yet. So I can really like sink 18 hours a day into this, which you need to do when you start a company, right? Like Alex, like as you know, like it's like you live and breathe this. And so I also felt like the time to do something really big and like push as much energy as I could into a project over 5 to 10 years, which you really need to do at the early stages, right? Before you have like a team. Like now I'm like, the CEO, but I'm also like this CMO, like the head of HR, right? You wear like very many different hats. And so I felt like now was the time to do like a good time to do it in my life. And it's like almost like there's never the best time, but like now was like a very good time. And I was also just thinking about like looking at myself in the mirror when I'm like 50 or 60 years old, which like, I don't know, maybe like a weird thing to do, but I was like, do I want to be like an investor for like the next like 30 years? And like, that's all I do. And the answer was no. So I was like, I need to like hit the eject button and like go do something really interesting that I'm passionate about that I think can make a really big impact on the world and like not like the cliche way, but like in a real way to me, right? Is like, I think one of the big benefits of crypto is you're able to offer financial services in a way to preserve wealth to the global population that don't live in America, right? Like John Reed Stark, who's like the former head of internet enforcement at the SEC, was on 60 Minutes on Sunday saying like, there's no value to crypto. And I was like, that is like so like you like you're just an American, right? Like you just like live in a functioning financial system. Like that's not true for billions of people, right? And yeah, so that was maybe a bit more of a long-winded answer to your question, but hopefully that covers it.
No, it was excellent. And, I think one of the things that I took away from what you said is, talking about being the son of an operator. And, for those of you who don't know, or for the portion of the audience doesn't know, Nick's dad runs Van Eck, Securities or Van Eck Global. And, when I look at asset managers that have really embraced new asset classes, new markets, I think there's a very rich tradition of that at Van Eck. And I'm curious, from where you sit, Nick, if you think that that's a feature or a bug relative to, sort of thinking about, your family and sort of, again, describing your father as an operator, I think is like a very great way of sort of leading into how he maybe views the world and also how you, by extension, have learned to view the world. So I'm just sort of curious, is that sort of a feature or a bug that, from a Van Eck standpoint of like sitting around the kitchen table, like looking at things in a new way, in a disruptive way?
Yeah. I mean, it probably goes back to my grandfather. So my grandfather started the firm. He took a few really big bets actually early on. So he started the firm in 1955. He launched the first international investor fund. So enabling American investors to invest in local foreign equities, right? So that was one of the first big things he did. The second big thing is he was a student of Ludwig von Mises, who, if you're a Bitcoiner, you may know is like a very famous Austrian economist, hard money, anti-fiat guy. And he started the first gold fund in the United States in 1968 when it was still illegal to own gold bullion as an American. And his bet was that the federal deficits were going to cause the U.S. to abandon the gold standard, which happened, 3 years after he launched the fund. I imagine it was a very long 3 years. But then that fund ended up being the best performing mutual fund in the U.S. in that entire decade. As gold went from like $35 to several $100s, and the S&P had a pretty awful decade. And so I grew up like surrounded by gold bugs as well. Right. And so Van Eck today still runs one of the largest gold mining funds in the world. I think it's actually still is the largest. And so when I was at this hedge fund and got exposed to Bitcoin, like the idea of like digital gold, like totally resonated with me because I grew up in that like gold bug environment. And I will say, it took a little bit of time to convince my dad that like this was like a real thing. But he was definitely way ahead of the curve relative to his peer group. So Van Eck first filed for a Bitcoin ETF in 2017. It took a little bit longer than I think we all expected. But I do think as like, a privately owned business that is like not at the behest of shareholders, you can do much more aggressive and unique and interesting things and try things, right? And like, it's not always just like about ultimately like growing the value of the share price, right? It's like, okay, like, do I think this is going to be an interesting opportunity for like investors that I want to give them exposure to? And sure, maybe it's like niche-y, but maybe it becomes really big like Bitcoin, right? And so I think that also gives you like a lot of control over the decisions that you can make and really like focus on just building really good products for people, right? Even if the ultimate market for that said product isn't, game changing to your stock price. And I think like this is also, you asked things I learned, right? It's like not every company is like a venture company, right? Like a lot of companies kind of get killed by getting on the VC hamster wheel, right? Where it's just like, oh, I have to, and I think you're actually seeing this with token projects too, right? In crypto, it's like, I launched a token, well, now I'm at this like crazy $5 billion, $10 billion fully diluted valuation. Well, I guess I need to launch a chain now too, or like 5 other things that probably don't really make a lot of sense, but you kind of do anyways to like fit this narrative, right? So yeah, I think a feature, bug, it's probably like a little bit of both.
It's really awesome though. And, maybe getting more into Agora, I think the audience is probably really curious about why a stablecoin company, right? I think you mentioned a little bit of this at the beginning, which is if you just look at the economics of stablecoin businesses, they're insane. You hear this, thrown around the ecosystem all the time. Your margin, your profit is my opportunity, right? And so, if companies are doing super well, it's going to attract more competition. And that's just sort of the nature of capitalism, right? But maybe for like the less informed in our audience that would say, the market for stablecoins feels really competitive. Where do they have it wrong? What are they missing? Why does the world need to evolve as it relates to stablecoin and stablecoin companies?
So it's definitely highly competitive. That is for sure true. But there's a few reasons. One, I feel like, and I chatted about this earlier, is we're at the beginning of what I think is going to be like multi-decade journey of blockchain eating financial services and payments. Like that is a 10 trillion plus opportunity, right? And I think, I believe like stable coins are like fundamental to that actually happening, right? Because they're just dollars, right? Like they are like the lifeblood of any ecosystem or economy or financial system, right? And so I think, that market is growing, but I also thought it was going to be a very interesting wedge into other things that I think are going to start to take off, like tokenized investment products, on-chain FX, cross-border payments. And so it was, I think, just the beginning of like what'll be a multi-product journey for us. Two, I was just very passionate about breaking the insane margins of like Tether and Circle. Like part of the reason why they're so profitable is because like in many ways they like are bigger rent seekers than like a Goldman Sachs, right? And so I thought there's a very big opportunity to build an institutional grade fiat coin partner to these businesses. Right? Tether doesn't really interact with many folks. And then Circle has obviously this single partner relationship with Coinbase where they actually, Coinbase, as of like the last earnings, makes more money from interest income from USDC than Circle. So I felt there was an opportunity to go fill like a very big gap in the market, which is like everyone else, right? Like everyone else touches stables too, but they're like not part of this economic value chain. And so that was really interesting to me. And I think I was uniquely suited to actually build a business with really strong bones here. So obviously, you touched on this, but my family runs an asset management firm. One of the biggest challenges over the last couple of years has been getting a bank account if you're a crypto company, but a very good bank, right? And like OCP 2.0 has been very well documented, so we don't need to get into it, but it was very real and it still is very real. And so we were able to get one of the largest GSIBs in the world to be the cash custodian, the fund admin of our reserve fund. And so that I thought was a very unique advantage at this stage, and it continues to be. I think, I always thought that advantage would go away, but it gave us, a multi-year head start. And then maybe to touch on like the competitive dynamics, I think there's there's not really a good definition for stablecoins yet, or like what those stablecoin companies are trying to do. USDC, USDT have the vast majority of the market share. And so it shows that there's huge demand for centralized fiat coins, right? That have really good on and off ramps or on various different venues, able to trade. Whereas you have like this very large, like long tail of what I would say like nichier stable coins, right? That are like CDPs or like decentralized stables. And I think like, it's just like, that's like very similar to like the fixed income market, right? Like, you have like tokenized treasury bills, which is like a massive market, US treasuries, right? And then you have like, junk bonds or, triple B or something, like you have all these different products. They're all in like this fixed income spectrum, and like some are bigger categories than others, and they don't actually compete with each other, right? Even though it's like, they're called stable coins. Like if you want to buy treasury bill, you buy treasury bill. You don't buy like a fallen angel or something else, right? And so for us, we could definitely compete directly with USDC, USDT, but I think this market's going to, 10x easily from here just over the next 5 years. And I think you end up with a combination of players where, maybe the top 10 own 70, 80% of the market. And then you have this long tail of other providers of stable coins, whether they're like, internal stables just for within a company, or like they're really niche-y, or they're like sort of like a structured product like USDE. That's kind of how I view the stablecoin world. But I think the innovation is just starting, but we're not really innovating as much like on the the tech side. What we're, at least for the fiat coin stable, we will be building a lot of things on the infrastructure and application side. But, the stable coin itself isn't like a huge tech innovation. It's more of like traditional finance, right?
So you covered, sort of the hardest part too, that I was going to ask you about getting started, which it sounds like, hey, getting, sort of a bank account set up and then having sort of, all those sort of other infrastructure aspects makes a lot of sense. Well, quick question, because it's, somewhat newsworthy and topical. We obviously just saw that, Stripe was acquiring Bridge for, $1 billion is sort of the, number I've seen thrown out there. Any sort of like perspective on that in terms of like what that means? And for those who don't know, Bridge operates stablecoin. Obviously, Stripe is one of the largest fintech companies in the world. And so I guess, Nick, the question is, how do you sort of see this acquisition? Stripe is sort of a traditional fintech company, clearly see, some sort of interest in, having a stablecoin as a strategic asset for their company. And I always frame this as, every company can do build, buy, partner, right? And usually when somebody decides to buy, it's because they view it as long-term and strategic. And so just curious your take on sort of that piece of news and maybe what it means for both the traditional Web 2 world and then what it also means for the stablecoin market.
First and foremost, it shows that Stripe is like really leaning into stablecoins in a big way. And I think, they want it, Stripe has actually a long history of experimenting in crypto, but like nothing is really stuck. And so I think they probably felt like, okay, we have a good team that's close to us in SF, right? That is doing something interesting, could be the inflection point. This is probably an opportunity for us to make a strategic decision. That's like the biggest lessons. I think there's a lot of, other ways you could characterize the deal. I frankly was a little bit surprised because I actually think on and off ramps aren't that hard. Like as an issuer, like you are a native on and off ramp, and we on and off ramp like a variety of different stables ourselves, like internally. And it's kind of like a part of the stack that I think is like trending towards zero in terms of fees. And hey, maybe it's because we help do that. So like that's, maybe shadowing something that we're going to launch. But I think it's just, first and foremost shows that stables are here to stay. And like the biggest, fintech and startup companies are worried that, crypto assets and like blockchain-based technology can eat their lunch.
Yeah, no, I generally agree. I think it's sort of a clear signal, right? You don't see many companies paying $1 billion for, something that they don't view as either highly strategic or something that could be even a threat maybe to some of the existing business that they do. And, we'll sort of see how that plays out both within Stripe and in the broader ecosystem. So Nick, I did want to make sure that we cover, some more specifics on Agora and sort of its aims and its mission. And, I think when somebody arrives and looks at what Agora is trying to accomplish, I really think like the headline is really making the US dollar more accessible globally. And I think that that's like where you're starting. Now that may not be, to your point, the 10 plus year kind of vision of like how products evolve from there. But maybe starting from like the 10-year vision, because we've talked so much about you have to think in those sort of terms if you're a founder, because so many things can change in the interim. You really want to have that 10-year vision sort of stay relatively fixed. How would you frame the end game for Agora? When you just sort of take a look at it, you say, hey, if I was building for 10 years, like what are the things I'm looking at and what does that world look like?
So the way that I think about the stack is you have like the settlement layer at the lowest level of the stack, right? So that could be Solana, could be Ethereum. Then you have the issuer and like the monetary network, right? Which is AUSD, right? So what is our utility on all these different networks, whether it's on-chain or off-chain, right? Like centralized exchanges, DeFi applications, like where can I really use this, right? Because if you're a fiat-backed stable, you should be focused primarily on utility and liquidity. And then above that monetary layer, you have, these sort of on and off ramp companies like the bridge, right? And other associated infrastructure that powers applications, right? Sitting in my seat on the venture side, it became really, I think, clear to me that the issuer was the most strategic part of that stack if you're looking above the settlement layer itself, right? Because you are a native on and off ramp. And ultimately, everything you do pushes prices sort of, up the stack or downstream, however you want to phrase it, right? So when Circle raises on and off ramp fees, Bridge either has to eat that or pass it through. They have no control, right? And, the end application and the consumer, again, then has to eat, Bridge or whoever else's fees, but then is focused on building, a customer facing product. And so what we wanted to do is start with like the money layer, right? Which is like by far the hardest thing to build. Like you have all these companies that are just on, basically wrapping different on and off ramps, this and that. But like at the end of the day, like Tether says, I'm charging you 10 bips or 20 bips, or Circle saying I'm charging you 5 bips, 10 bips, 20 bips. You have no choice but to eat that, right? Or pass it to your consumer. And so holistically, I was like, as the issuer, we can choose like, okay, AUSD fees are 0 forever. Right. And then maybe we start to offer USDC, USDT at cost, and given that we're actually working with all these businesses and getting them in our, economic network, you could see us building into the application layer as well, where it's like, okay, maybe, they self-custody their assets, in the Agora business account. And there's a lot more things that they can do beyond that. And I don't want to get into, all of it because some of it's, we're going to be announcing Q1 and Q2 the new products, but it's like you own the whole stack from the money layer where you have a stablecoin with hopefully tens, if not hundreds of billions of outstanding circulation used globally. It's also saying to these businesses, hey, we want to be a really good fiat coin partner to you in like financial OS, right? So everything that you're doing on chain, you can do, your finance team can do from your Agora business account. And maybe to use like a Web2 analogy, it's like TransferWise and Wise's business account, right? Where, you can move money, you have a card product, right? You can invest in different opportunities, and right. So maybe we embed Aave and like all these other applications into our enterprise portal, right? And so that's the longer term vision is really starting to capture more of the stack above us where it makes sense. Like we don't want to do everything. We're leveraging actually a lot of third party partners for some of this, right? And then you just own the distribution. Right. So like we're not going to, build our own custody product or wallet as a service. We'll just use someone else. Right. We're not going to launch our own card network. Like we'll like white label someone else. Right. And so, maybe you start to own different things over time, but I think you can build a much better experience for many of these companies and also help push crypto and blockchain adoption, right? To, maybe a commodity company that doesn't even care if it's crypto, right? They're just like, oh, I can move money cross border 24/7 for a penny. Great. Sign me up. Right. And like you abstract that experience away, which we may do over time. Right. And so that was, the longer term vision. There's already some things we've like chosen not to do and some things we've chosen to do. And I'm sure that'll, continue to be informed by like our conversations with customers. But yeah, that is like the higher level vision.
Super helpful. And maybe to go to the other end of that spectrum, we live in sort of here and now. So when you look at 12 to 24 months and you think about just stablecoins as a category and US-backed stablecoins, let's just say as a category, what do you view as the like no-brainer, really low-hanging fruit as it relates to, that category? I think when we, sort of talk about what are really good product market fit products in crypto, I think people often look at stablecoins as a really great example of product market fit, and in some ways has externalities that we didn't expect, but are playing out, whether that be remittances, cross-border payments, frankly, folks in emerging economies using US-backed stables as a way to store value, especially if they have hyperinflated, local currencies. So how do you see 12 to 24 months, what I would say like low-hanging fruit adoption type cycles things in sort of the US-backed stablecoin market?
Yeah, I think we're just scratching the surface on cross-border payments. So I actually think like a lot of what stablecoins are going to do is just eat, basically like the cross-border payment network, right, and corresponding
Right.
banking network, as well as Swift. So I think that is like relatively low hanging fruit over the next 12 to 24 months. And then I would say like just taking like, even like bits of market share from Tether or like other providers. We chatted with someone that uses like Ripple OTC to like move money. And we're just like, you should just use like, and they're moving like 10 million bucks a day. I'm like, just use a stable coin. So I think those are some of the categories where it's like low hanging fruit, where just like the market's growing. And even if you just get a small percentage, it's going to be a very nice business. Something that I think a lot about is, right, like, to date, a lot of stablecoin adoption has been crypto trading, right? Like using it to trade in DeFi or, in a centralized exchange. I think that'll continue to grow. But I actually think there's going to be like a few other categories that like 100x stable adoption, use amongst tokenized products, FX. And so like those are some basically stablecoin neobanks for consumers, NEM. So like those are some of the areas that we're spending a lot of time in that I think everyone is going to, every stablecoin issuer should benefit from, just because the market's growing so much, right? And like that alone should carry the boat.
I do want to talk about all the progress that you've made. I think, when we got together in New York several months ago, you were just getting going. And I mean, there's been a lot of noise and a lot of really exciting sort of updates coming out of Agora really since you launched it. I'm curious from your perspective as the founder, what achievements so far are you most proud of? And how would you why would you say it's, your most proud achievement or achievements?
Yeah. So, the first couple of months is like very much just getting things stood up, like the custodians, price feeds, apps. And I would say like the first, and each of those are small wins. But like for me, like the first day where like I was like really fired up is, when we crossed like PiUSD in terms of volume numbers for the day, which like happened way faster than I thought. And like PiUSD went to mainnet before we even started, like months before we even started the company. And like, that's a very large publicly traded fintech that threw a ton of money, resources into the stablecoin. And so like surpassing them like so quickly in our journey, like was like a really exciting day. And, we've continued to just like, week over week, month over month, just like crush volume numbers and user numbers to the upside. And so like that's been, that's been exciting. I would say the next big milestone for us beyond, more centralized exchange listings, more chains is, going to like staples like Aave or like one of the, three big global exchanges, hitting that 1 billion number in terms of circulation. Like those are some of like the other major milestones that we're looking forward to. So, but like crossing PiUSD's volume, I think it was like 3 or 4 months into our journey, like was awesome. Like that was like the first day where I was like fired up. So
must have been an awesome experience and a moment, right? That you'll remember, no matter where you are with the company's journey, right? You'll always kind of remember that point in time. So Nick, talk to me a little bit more about how do you think about, sort of prioritizing distribution for AUSD in terms of applications, networks? You sort of hinted at this in a lot of ways in terms of how do you eat the market, but I'm just sort of curious how you think about it more tactically and what the factors are that really guide that.
Yeah. So we wanted to build like a base level of liquidity on chain and focus with like a few ecosystems that we think are going to be around for a long time. And so like it was like getting to like USDC, USDT network parity and like a baseline of like liquidity first and like, apps. And so I think we've actually achieved that. And you're going to see a lot of things in Q1 that are a pretty big deal. We won the Ag Layer RFP. So we're going to be like the stablecoin on the Ag Layer, won that against, USDC and other people. So like that was a great win. And I think it's going to be really important to us. But like tactically, it's focusing on people that are doing unique things with stables. So I think there's an opportunity to build like that, a brand of like, okay, like this is actually like the company that's like doing the interesting things, like whether it's like AI agents or something else. So like leaning in there, but that's like a little bit more ad hoc and like just fun. Like, oh, I see an interesting company. Like I'm going to ping them, right? focusing on the developer experience. And so there's a few things that we're going to announce in Q1 where it makes it really easy to use AUSD like out of the box. If you're a developer building an application, building our web app to be able to cater to like some of these PSPs and folks that are just like leveraging stables to make moving money better and like kind of using like Agora's app as like their hub, right, to do so. And then focusing on like market infrastructure. We have a product that we've been working on with a number of very large financial service firms that we're going to announce probably in February publicly. We've started to beta test it already that I think will be pretty interesting. And so leaning into like that, I hate to call it RWAs, but just for lack of a better terminology, like RWA market and like, the tokenization market is somewhere where we're tactically spending a lot of time as well.
Got it. And you highlighted this earlier, really related to business model stablecoins. And I think it's something that when you presented Agora to me, it was, really a core element of what you highlighted. Maybe talk a little bit more about how yield relates to how you guys think about AUSD, both how you generate it and then also how you distribute it to holders and users and what your philosophy is there.
In terms of like generation, it's very vanilla. It's like, USDC, we stick it in overnight reverse repo, treasury bills. So Van Eck is the investment manager. So you have an investment manager that manages over $100 billion, has been around 70 years, global, et cetera, managing it. And then that's cash custodied at State Street, one of the largest GSIBs in the world. So, assets safe, secure, and very liquid instruments to back the stable. And like how I viewed, really like Tether and Circle's revenue was like almost like a CAC layer, right? Like, you have like all this like yield generating money and you're a one-to-one stable. You don't have to share with anyone else. Like, oh, this is kind of like just like my CAC layer, right? I'll just like leverage this to like go get distribution. And so, what we do is, to be compliant with AML requirements, you have to KYB everyone. So my view is like, okay, well, it's these businesses that are the ones driving a lot of this value, right? Like you should just go to them and say, okay, for, services that you provide to us, like we'll share the majority of the income with you. And then what you do with it is like up to you. And like most of them are just building like the best products around AUSD because like they're getting effectively subsidies from us. Whereas like Circle and Tether is like, no, we're keeping this for ourselves, like go away. And so that was like the, the initial distribution strategy. And like, but like really beyond like the economics, just like, it's more of like our mentalities. Like we want to be positive sum players in this industry and be like a true partner to you and your customers like as a business, right? And like I felt that neither of our two largest competitors were really taking that angle, and that was an opportunity for us. And so that's, while like that revenue and like that distribution is sort of like one of the wedges, it's not like the be all end all, right? And ultimately, like you have to build a much better product holistically, right? Like whether it's zero fee on and off ramps or 24/7 mint and redeem, like there's a lot of things that go into why people use stablecoins beyond just that. And you have to take on that part of the stack. So we're doing that as well.
Got it. And when you look at, I always ask folks in particular categories, where do you feel we are in terms of the arc of, adoption? You've mentioned earlier, when we look at stablecoins, still feels really early. And I'm curious what you watch as sort of a leading indicator or set of leading indicators that gives you a sense of like when adoption is either accelerating or taking on sort of a different growth profile than what the status quo is.
Yeah, I think we're probably bottom of the second inning. And the reason I say that is, okay, well, we have a large fintech that has acquired a stablecoin company for a large price tag, right? Whether it's like equity or cash doesn't really matter, but the number is eye-popping enough, right? It's kind of like the Instagram acquisition where it's like, oh, okay, like, they shelled out like a real, dollars for this, right? Or really thought deeply about it. So I think that's one. But there's like not stablecoin legislation in the United States or most places around the world, right? So you're bound to be early, right? There's not that many traditional businesses that are using them yet. And I think that changes, particularly outside the United States, quickly. But there's not enough infrastructure set up to make like non-crypto native companies comfortable yet. Like whether it's like good MPC support or like good tooling, like we just don't have all the things to really enable a business to run on just stable coins, right? That said, we have like 200 billion in stables outstanding. So we're like somewhere in the journey, right? It's not like nothing. But you looking at the euro dollar market, which are US dollar deposits and offshore banks, like that's over 15 trillion, it's probably more than 20 trillion now, right? Like, so if you think like that's the market for stables, which I think it is, yeah, you're just like kind of scratching the surface.
How would you bifurcate in that the difference between like retail and institutional, right? Because I think you could look at sort of the retail market and look at, emerging markets and a variety of other places and get sort of a handle on where that is. On institutional, it's a little bit, I think, harder and a bit more opaque. How would you bifurcate that sort of like adoption curve and some of that commentary to maybe the retail and the institutional market specifically?
I think retail adoption is much further ahead of business adoption. And I want to call it business adoption versus institution, because I think institution, I always think about institutional capital, which is like more like trading firms or like asset managers.
Mm-hmm.
But like real, businesses like payroll companies, right? Or cross-border payments, right? Like that is the majority of the of dollars in a market, right? Is always like business capital, or whether it's endowments, foundations, institutions, businesses, I guess however you want to articulate it. And so like we have very low penetration there. And I think once it starts to happen, that's when you're just going to see stables go from like 200 billion to like $1 trillion in like 6 months, right? Like something crazy, right? Like a crazy eye-popping stat. And part of my view on this is informed just like by being in this market and like having been in crypto for a while. But also if you like look at asset management, like 90%, I bet you more than 90% of BlackRock's AUM comes from institutional capital or businesses or endowments or foundations where you have a few people making a decision for a very large pot of money, whether that's a business or some sort of other structure, right? And so that's why, like, I think we're much earlier on the business side than on the retail side, where it's like mostly retail today. There's a few cross-border payment businesses that are using this to move money, but other than that, I don't think there's that many businesses that use stablecoins as the core lifeblood to their day-to-day.
So Nick, we always ask all of our guests for their high stakes hot take, which we would define as your biggest and boldest prediction for the Web3 and crypto space in 2025. So what do you got for us as your hot take?
I think Coinbase acquires Circle.
Wow.
I don't know if that's that hot of a take, but like I feel like it's been a long time.
That's in the cards.
Yeah, it seems like they're just so tightly wound together. I think it makes sense.
Very interesting. So we'll see what happens. We'll call you on whether or not it actually happens, and you heard it here first. So with that, let's wrap. Nick van Eck of Agora Finance, thanks for joining us on High Stakes, and looking forward to having you on again soon.
Yeah, thanks, Alex.
Keep exploring and keep innovating. Learn more at validationcloud.io and follow us on X and LinkedIn to stay connected as we continue to shape Web3 for institutions. This is High Stakes with Alex Nowaka, signing off.